Right, good morning. Today is May 15th, 2024, and I am back after a short hiatus of being busy doing a bunch of stuff. So I haven't done a show in a number of weeks, but fear not, everything's going fine. I had I had a lot of stuff going on, which I won't get into here because you probably don't care why I wasn't able to do a show the past few weeks. But anyway, just suffice it to say, I've been busy with the kind of stuff that people do in the springtime, and it just so happened that each Wednesday was turned out to be a particularly bad day because I had stuff going on in real life. But I'm back. Everything's good. The market apparently is liking today's CPI numbers that came out this morning. So that was pretty exciting when the CPI numbers came out, basically exactly as expected, and the futures popped pretty good on that. So anyway, we're going to take a look around the charts, and it's been a while. It's been a while, so it's going to be pretty interesting, to tell you the truth. So just to review, the last time that I did a show, geez, I think it was back in April here. We had broken this trend line and we're sort of in pullback mode here, right? And so the market was in pullback mode and then caught the little bounce. And interestingly enough, you can see this little W pattern. In the past, whoops, let me get that out of the way. In the past, you've heard me talk about how the W patterns are, I've noticed over the years, one of the most powerful patterns that I've ever seen. I mean, I remember, going back to like 2016, 2015, years and years back. Anytime that, and this one's obviously not quite as ideal as W patterns I've seen in the past, but I got to tell you, every time I see one of these. So the problem with this one is there wasn't enough of like sort of the right side of the W. It kind of just, but you can still see it, right? But it just broke out above the I don't know what you would actually call the midsection of the W. But anyway, that's sort of the and it kind of makes sense in a way. If you think about the market psychology of the participants, you have an uptrend and then you get a sell off and you get the first bounce and then you come back down and sort of test the area of the lows and then you get the second bounce, and as soon as that second bounce like sort of, looks like it's forming the right side of a W, typically when it breaks above the what would be the middle part of the letter W, when it breaks above that, as hard as it is to believe, it usually you get continuation. So anyway, I had this little zone right here, like right up at, you know, the market's at the nominal all-time highs in the history of the world right now. But what you need to consider, and I've talked about before, and since today is CPI day, it makes sense to mention the fact that the last time, and it's been a couple of months at least since the last time I went over to the handy dandy BLS calculator and plugged in the numbers. But as you recall, and it's been a while. Let's see if I'm sure I can get this on my chart. Yeah, okay. It's been a while, but here you go. At the very beginning of 2022, you had this high right here was 48.18, I believe. I'm recalling that from memory. So you had 48.18 as the all-time high nominally in the history of the world. And then, of course, here we are. It took all the way until this year, right? So think about this. All of 22, all of 23, and into 24, and then towards, back at the beginning of the year, we finally made a new all-time high. So a couple years went by there, right? And so, now here we are 2.5 years. But here's the interesting thing. If you go to the CPI inflation calculator and you type in 48.18, based on the inflation that transpired over this period of time, and now we're looking at 2.5 years, the S&P needs to be at basically at 5,300, right? can't really get 5,300 to show up on my chart, but you get the idea. I mean, we're getting close. Another 50 points, and then we actually will be at the all-time high. But as of this moment, and there's a difference between nominal all-time highs and inflation-adjusted all-time highs, obviously. And it's just like anything, it's like the purchasing power of your dollar. A dollar used to buy a dollar's worth of stuff. Now it buys, now a dollar buys a nickel's worth of stuff, depending on how far back you go. So it's it's a nefarious scheme they've concocted with, the slow devaluation of the dollar over all these years. But the thing of it is, people are catching on, right? For years and years and years, and recent years, they would say, they'd come out, all the economists and the Fed and everybody would say, oh, there's no inflation, inflate this and that. And meanwhile, behind the scenes, there was tremendous inflation happening in asset prices, home prices, all this type of stuff. And then, your insurance would go up and the price of gas would go up and all this stuff. And they pretended there was no inflation because it wasn't necessarily manifesting in a lot of stuff. But the thing of it is, I would always say this, is that the price, the cost of living has been rising since the day I was born. So, and I'm sure you all know that. But anyway, long story short, people are starting to wake up to the idea that inflation, and average Americans, I saw this on like NB or the local news or NBC News the other night, which I try and avoid the mainstream news. But anyway, inflation is it's the number one concern this election season for the average American, right? And so anyway, that makes me wonder if somehow, I saw something this week where they're taking the price of coffee out of the CPI, which seems ridiculous to me, but most of us in the markets and that follow, economics and all this kind of stuff know that they have changed the way that the inflation numbers are calculated multiple times to make it, to make it look better, quite frankly. And there's, a couple of websites that attempt to publish what the inflation numbers would be based on the old calculations from back in the day. But I think it's safe to say, and a lot of this is all, pandemic stuff too. See, that was the big, there's the pandemic. It's easy to spot the pandemic on the chart. Anyway, everything, the inflation like was blamed on the supply chain issues, right? It was like a joke sort of, because inflation was blamed on the supply chains, but meanwhile, this pandemic sell-off, the subsequent rally, was fueled by the trillions and trillions of dollars that the Fed created out of thin air as an overreaction, and they even admitted it was an overreaction. And so, the old ancient definition of inflation, going back to ancient Rome, is the watering down of the money supply, right? So higher prices were the result of inflating the money supply, and so all of that terminology has been twisted around these days, and everybody says inflation instead of the rate of inflation, and they make it seem good. They make it seem like a good thing when the price of everything doubles and then the inflation rate decreases. And so that just means that, everything's still crazy expensive. They let the genie out of the bottle. The damage has already been done. See, that's what most people don't realize. Well, people are starting to catch on, but most people don't understand how the math works, right? That inflation compounds. And so, if the price of everything went up and up and up and up and up, and then even if it didn't go up at all, right? If the inflation rate was zero, everything's still crazy expensive because they screwed up. They screwed up. I mean, the result of creating, whatever the number is, $6 trillion. They basically created $6 trillion out of thin air and threw it out there, and of course, they'll say that, well, there was the stimulus and the spending and the bills and all this. And so, blame the Fed, blame the government, blame both of them. But the fact of the matter is, I mean, how old is America? In the history of the world, no currency has ever actually survived the long term because of inflation, and eventually just the way it's constructed, and especially our monetary system, the way that money is actually created by debt. But that's a whole nother story. Basically, they created inflation by throwing way too much money, overreacting to the pandemic back here, which caused asset inflation, which then trickled into the economy. And lo and behold, so here we are today, and theoretically the market should be at nominal all-time highs because that's just how it works, right? You take a country like, I mean, you take some of these like what you would consider to be banana republic countries or whatever, and so they might have an inflation rate of they might have an inflation rate of 900%, and their stock market goes up, 300% or whatever, just as an example. And so you can't get fooled by nominal numbers. I mean, it sounds great that the market's at an all-time high, but inflation adjusted, right? The inflation adjusted S&P is sitting right about the same level that it was at the beginning of 2022, 2.5 years back. And so basically, what that means is if you had $4,800 in your pocket, 2.5 years ago, if you don't, it takes $5,300 today to buy the same amount of stuff on average, right? On average. And so I think people can identify with that. Nominal numbers are kind of can be misleading, I guess is the word I'm looking for, because of what I just said. And it's all about purchasing power, right? Purchasing power. So in theory, the price of gold's like around $2,400, which I don't know how many, average people keep track of the price of gold, but I told my buddy that the other day when I was talking to him because, 15 years ago we used to talk about gold preserving purchasing power and how silver was probably a pretty good investment and all that. So, I mean, if you think about it, and let's just look at the old GLD ETF here, just for the fun of it. Yeah, so let's take a look at a weekly chart, just for the fun of it. Yeah, look at that. Yeah, that's going back to the inception of GLD. And so, geez, what was the price back here? I want to see what the original price was. So you figure in theory this is supposed to be about, 10%. It's supposed to be about 10% of the price of gold. So, gold when this thing came out, gold was like say $400 back in 2005. Around $400, maybe a little over that. And so now the price of gold is, and of course, this doesn't this doesn't necessarily reflect it because gold would be about, I'd say the gold futures I think were right around 2,400. This is only 22. This would only show it as being like 2,200, but you get the idea. So has gold preserved purchasing power? Well, let's see. I guess we'd have to go back and look at the pandemic here. So, interesting. I'd have to do the math on this to see. So there's the beginning of 2022. This was 170 and now it's 220, down a little bit from the highs, but it's probably close. It's probably close. So that was the idea. And of course, everybody talks about Bitcoin and that type of thing, but not me. Not me. Let's look at. Well, let's see. There's another daily chart with a bunch of markups. So there's the breakout of the highs. Yeah, it's this is kind of an interesting little run here that we're on. This is what I wanted to pull up was this weekly chart here. Weekly chart's a lot cleaner. Objectively speaking, based on what you see on this chart and what I see, this is a pretty constructive. That's a pretty constructive pattern. Although, as we can see with I'm going to zoom in a little bit here. You see how these 3 weeks here kind of formed a flat top, and we're just kind of trying to poke above that. I would expect that there's going to be some resistance in this area here. But so if you think about it, the stock market's within spitting distance of the actual inflation-adjusted all-time high, which is something. Given the state of everything and how sort of convoluted things are and this and that. But then again, everybody knows, or at least the wise men know, that the only way to keep up with inflation, right? See, that's the only way to keep up with and hope to beat inflation is by investing in the stock market, because there's a correlation there. And of course, there's the same with real estate, but the problem with real estate is that it's way too subjective. I believe it's way too subjective. I hear and people buy real estate and they feel entitled that it always has to go up. And man, I don't get me started on the potential problems in the real estate market, but there's lots of them, right? And and the crazy thing, I see a lot of I see a lot of commentary about people that talk about how dysfunctional the real estate market is, and it's extreme. It's probably never been more dysfunctional, in the history of the world. Now it has been in other countries, right? Japan had their property bubble and all that, but um, the real estate market is extremely dysfunctional. Part of it is the problem is with Airbnb and people buying rentals and investments, and the Fed, the Fed owning mortgage-backed securities. Geez, I could do a whole show about how dysfunctional the real estate market's become. So, the funny thing is, as long as I can remember, people be like, well, they're not making any more land, and this and that, and people like the real estate investors like to pretend that land is scarce. But if you've ever flown coast to coast, or or driven through multiple states, you realize that that there's plenty of land in the middle of nowhere. And then of course, location, location, location. But anyway, and obviously, in the long run, the price of owning or renting a home has to be in line with people's incomes. And when that gets out of whack, then some sort of adjustment. I mean, it's like a law of economics. Certain things can get out of whack and stretched for a period of time, but there has to be some sort of adjustment eventually. And so, um, yeah, we'll see what happens. And then plus, I haven't even talked about this, but there's demographics, right? And speaking of demographics, the insidious thing about inflation, while I pull up something else here to look at, NASDAQ all-time high. The insidious thing about inflation is it really hurts retired folks living on a fixed income, elderly, and there's lots of those, elderly baby boomers living on Social Security, right? And yeah, they adjust the Social Security payments a little bit for inflation, but ask anybody elderly person that's living on a fixed income if their Social Security is actually keeping up with the cost of living, and they'll probably give you an earful about that and tell you that bread used to be a nickel, right? So the bread that I like is like 4.59 a loaf, and so that's the thing about grocery inflation. And the funny thing, when the CPI number came out this morning, they said that there's like literally no year over year, I think. I don't know, I have to look if it's year over year or month over month, but they said there's no inflation in food. Like food inflation is 0%, which is kind of interesting. There is a lot of deals at the store, and personally, every week I look at the what's on the buy one get one free, because that's what I like to. There's always stuff on there that I actually use and like, so I take advantage of that. And yeah, so the thing of it is, if the price of your groceries has been going up and up and up and up and up and up, and it's just crazy expensive now, and lots of people struggle to put food on the table for their families. So a reprieve, the simple reprieve of prices, not going up more yet is kind of, everybody should be thankful that the price hasn't gone up again, when in fact we're paying pretty high prices for groceries. It's crazy, but and the thing of it is that, a little bit of inflation over a long period of time is kind of the way things have always worked, right? And it's not nearly, it doesn't do the same damage as like what we've had. Um, the compounding in the inflation, post pandemic, if you want to draw a line there at the beginning of, just say 2020. So in like 4 short years, right, the price of everything is up, 50 to 100%. I mean, depending on what you're talking about. And so in the big scheme of things, that's bad. That's really, really bad, because 4 years is nothing. And so, if we had 4 years, 4 years of inflation at 0%, maybe people would be able to sort of catch up or whatever. But um, there's talk of stagflation. There's talk of eventually there has to be another recession. And see, that's another thing that's kind of out there. And I know I'm talking about a lot of economics instead of the charts, but anyway, back to the charts. Nasdaq right up against the highs here. And the thing of it is, if it pokes, a couple of pixels above the previous highs, that's not necessarily indicative of like a big runaway move. So it's pretty interesting, though, that this most recent dip got bought right back up. I mean, that's sort of the fascinating thing to me. Let's look at the SPY here. This most recent dip, which, yeah, a few percent. I mean, it was just a normal sort of dip. But the way that it turned around and got right back up, based on the idea that the Fed's going to start lowering rates again, right? And the Fed keeps saying over and over and over that they're not going to lower rates. But here's the thing: it's an election year, and maybe the smart money knows that the powers that be are going to do everything they can to keep the train on the tracks and the market at the highs and everybody feeling good and the inflation numbers looking good and strong economy and all this stuff. So it's here's the thing about inflation is if I buy a can of cat food at Walmart, it's one price, and if I buy it at Publix, it's another price, and if I buy it, at Target or Harris Teeter or whatever, and so it's kind of like buying a beer at Circle K or buying one at the Marriott pool bar, right? So there are options out there, and quite frankly, a lot of the stuff that I like to eat is relatively inexpensive for what you get, and smart people can eat cheap. The real insidious inflation is in things that you just can't cut back on, like healthcare expenses and especially health insurance, and just insurance premiums in general. And going back to, the problem in the housing market is property taxes and insurance are destroying a lot of homeowners, right? And that's I don't know what the solution for that is, because property taxes and insurance are a killer, especially here in Florida. And so that's something that, like I said, I could probably do a whole show just talking about, sort of the how dysfunctional everything is when it comes to the real estate market. So, and the funny thing is that what makes sense to me, right? What makes sense, what makes like sort of seems like common sense these days goes out the window when you talk about real estate and property values and all this and that, because there's always somebody, somewhere where it's more dysfunctional than where you are, and so they're willing to overpay dramatically for something. Doesn't make sense to me, but um, it's way more expensive. Obviously, and interest rates play a big part of it. So if the Fed juices the market, and actually I think Fisher was on this morning, and he said that he didn't think that they were gonna lower rates, and they shouldn't. I mean, if their inflation goal is 2%, which in and of itself is kind of ridiculous. I mean, to me, it should be 1%. um, Anyway, Q's looking pretty good here. It's going to be interesting to see how much resistance we get here. Or I'm sorry, the SPY and the Q's. I mean, both of them are, pushing the highs. Whenever they're at the highs, you never know how much, additional traction it can get once it pushes through the highs. But the gist of it is that there's also resistance, right? And you guys remember we haven't looked at the Russell in a while, but the Russell 2000 is kind of carving out like a nice little bottoming pattern. Look at that. Yeah, it's 2 years of a bottoming pattern, so to speak. And this has always been a little bit more. This has always been a little bit more along the lines of, the average stock. Market's been a little bit sort of since the pandemic. The market's been kind of for a long time. It's been held up by the largest market cap stocks and all that good stuff, and then there's pockets of animal spirits out there. But anyway, basically, when the Russell 2000 starts acting well, then that's typically a pretty good environment. So anyway, right now, it feels like one of those, you know, as long as the music's playing, it's always a game of musical chairs. And so I think it was who's it, Dennis Gartner used to say, is as long as the music's playing, you got to dance, or something like that. So it's a pretty good environment for stocks right now on a day-to-day basis. And looking at the charts objectively, it's hard to be, extremely bearish, but at the same, and given the fact it's an election year, so it's going to be interesting to, we're in the whole sell in May and go away type of thing. So, and quite frankly, there's been a lot of really dull price action recently. So it's going to be interesting to see how this summer sort of pans out, because if the price action is dull in May, I can't even imagine what it's going to be like in July and August. So, um, I mean, yeah, well, I don't want to get into that right now, but real quick, I should have looked at more charts today, but I haven't done a show in so long, so I had some things I wanted to get off my chest. ARK, I almost have to look at the daily chart of this now because it's been a while. So, yeah, so the over and under on ARK, I guess, is probably right about $50, and I was sort of hoping it would take a deeper dive here, and it still could. this pattern that's starting to manifest here is similar to the one from back last year. So we've had the first kind of major sell down like we did over here, and then there was a bounce and then a lower low. Um, and so you've had a sell down, a bounce, and a lower low, and now it's starting to come back up. And it's going to be interesting to see. It's going to be interesting to see if this low can sort of hold. So yeah, I mean, ARK seems like a pretty decent trading vehicle, right? It has a lot of price movement. Has a lot of, well, I would say trending sort of price movement. So if you catch this at the right time, there's a lot of opportunity for, I'd sort of say like a medium to longer term sort of swing trade. So at this juncture right here, um, let me just let's draw a couple things. I always used to say that I could look at any chart and and figure out a place where you could enter and put a stop loss and basically take a trade, right? And there's different ways to do it, but something like that is completely viable, right? It's completely viable. So I mean, it's not really a W pattern, but this could easily break above, and you got a pretty solid resistance there. And so if you wait for this to break above the resistance, and as far as the stop, I mean, you could go here. You could go give it a lot of leeway down here, but I'd say in theory, if it were to break above this resistance zone, then you could have a stop like sort of down here, whatever, and that might make for a pretty decent trade. So, and with the idea that you're hoping to catch one of these runs that continues for a few months, and so there's every possibility, and I could draw a bunch more lines on this chart, but there's every possibility that this pattern has some symmetry to this one, where you had a sell down and a bounce and two lower lows, and that theoretically could be this lower low. And then you catch one of these moves like this, and you see several of them here on the chart. Well, that's a substantial move, and so that move would probably take this thing. And I mean, if you look at the longer term picture here too, there's a lot of opportunity here. So, and quite frankly, I don't really follow this that closely. It's always interesting to see, what the top holdings are in this and that, but you got a humongous bottoming pattern going out years, and so the same sort of concept could be applied. This little sort of, wiggles here on the longer term view are sort of nothing. Of course, this is a daily chart, and so, um, the thing of it is, a lot of people have been burned in this over the years, and if you look at this, it's an epic disaster, but something like this, and it's basically an ETF. See, that's the other kind of cool thing about it. So it has the potential to rise from the ashes like the phoenix. So, all right, well, I've run out of time. As you can hear, my phone's already ringing off the hook, and so I'm going to wrap this up, and thanks for tuning in, and I will see you back here next week, same time, same place, because I'm back.